Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session thus far. I'll tell you what, the thing that's scary is this inflation data that just came out. It is having an effect on equities. Well, I'll come back to this chart here in a second. You're seeing a little bit of a sell-off in equities just from the highs, but nothing to be alarmed about. Nothing I'm really too worried about. But let's take just kind of a more of a close-up look of inflation, or not of inflation, excuse me, of the stock market, because I have to say that with higher inflation comes something else, right? Tighter monetary policy. That's just the bottom line. If you want to know how the Fed or any central bank is going to combat inflationary pressures, they're going to raise rates. That's it. Okay. So hold on really quick. Let me just hold on real quick. Forgot for all the newbies in here. Okay. All right. So, with the S&P, just keeping that, what I just said in mind, here's the S&P, kind of like this is an ascending wedge right into, obviously, the 161% extension, which is critical. You look at the overnight highs and we hit 41.13, the 161% extension based on what I have drawn, which isn't perfect, right? Comes in at 41.19. So, I mean, we went as high as 41.13. So I'm going to say that in the S&P, resistance, 41.20, that's key. Okay. We're bullish, but you got to be real careful here, because obviously if you look at like a 4-hour relative strength and what the fuck? Oh, how'd that get in there? I was like, where is that? Okay. What you can see here is we've seen divergence in relative strength as we've been hitting new highs this whole week. So right here's relative strength. There's your divergence as we're hitting new highs. So you got to be a little careful with it, especially if we slump through the hourly lows. So let's figure out where that's at. That's going to be, well, you got 40, 85, but probably most important is going to be right here at 40, 60. So I'm going to write down 40, 60, 40, 85. Those are supports. Those start to give way, and then you got to be a little nervous with what's with equities. Okay. All right. So again, the inflation data running hot like it is, that producer prices much hotter than had expected. Remember, that's going to make its way down to the consumer. Stocks are starting to feel, ooh, I don't know how much I like that, right? I don't know if I'm going to really enjoy that. So watch the NASDAQ. It's important about the NASDAQ here is that if the NASDAQ turns lower here, we're not hitting new highs, which, for growth index or, not so good. The Dow also, we just didn't hit new highs. Not saying that we won't, but we just haven't as of yet. And, again, the inflation data is probably giving some people a little bit of a heebie-jeebies up here. All right, so let's talk currency. So the euro dollar, very important turn away from this was a previous, if you guys recall from earlier this week, actually you can see it here. If you go to ForexAnalytix, I'm sure you're going to be able to see it here. If we have, there it goes. Let's go over to the 4-hour charts. So you can see this is what the flag that we had drawn before. If you take this trend line here and you just extend it through like we did here. I had to just delete some drawings yesterday because it was getting a little too crazy. The flag was drawn like that, right? Basically. So you can see where the market's focus is. Let me just get rid of this. See where the market's focus is this underside of this trend line, support, resistance, 38% retracement, pretty important. So that means this this hourly low is going to be really important today. So, and then this is the neckline of the inverted head and shoulder pattern that Amanda had pointed out earlier this week. So 118, that's going to be 118. I'm going to call it 118.50, and then below that 118. So those are two support levels we should be watching today. 118, 118.50, and then resistance is going to be, obviously this is now critical resistance, is 119.25. You know, considering that we held the 38% retracement, I'm going to have to keep us in bearish today. I have to. It just has to for now. Okay. Cable. This is scary if you're long, because you know we had this drawn out earlier this week. If you guys don't recall, let me just redraw it for you. Okay. Okay, we had this drawn out. If you don't remember, it was this, right? So we were looking at this triangle developing. We broke out. We got a false breakout. I'm just, just revisiting earlier analysis from the week. We reversed. Then, we posted a false breakout. So if you go, if you remember all this analysis, right? The 38 level could expose a breakdown below. False breakouts led to breakdowns typically, right? False breakout leads to breakdowns typically. So now what we did overnight is we actually tested the support. So that means this is so critical for bulls to hold now. Bulls have to hold this support. They have to. Okay. That support comes in at 36.60. That's important. We're in range, but I will flip to bearish if we break through this support. Okay, I will. We're holding up right now, so resistance will be 137.85. Okay. I mean, I'll admit right now that the cable's holding up pretty well, right? Aussie. Key resistance is going to be 76. Well, right here now, 76.65, because this is channel resistance, right? 76.65. We're bearish while we're in this channel. The longer term head and shoulder pattern, obviously, I don't have to revisit all that. You guys already know that. Support. Overnight low, spike low, spike low. You can see all of these spike lows are holding, including the overnight spike low, which is 75.80, 75.90. So let's watch that on dips. Okay. Stocks are going to be opening in just a few minutes. Kiwi. We're still being capped by the 38% retracement at 70.70. Support at 70 cents. I don't think there's anything to do right now with the Kiwi. Stocks are bouncing a little bit. Dollar's bouncing a little bit. I'm sorry. Euro dollar's bouncing a little bit. We remain bearish in the Kiwi while below 71 cents. Remember, this bear flag, just to know where it completes. It completes at the 618. Whoops, that I didn't mean to do. What is that? it completes at the 618 retracement, which we haven't reached for yet, which is below that 69-cent level. Okay. Would you call these lows completed? Not yet. And that's the issue right now with like the Kiwi, is the Kiwi dollar, I think could reach for a brand new low first before finding a significant low. You know, it got to complete this pattern. We actually have to make it down here. And it's also the 618 retracement, longer term 618 retracement from, you know, this move here to the high. So, you know, I still think that we can revisit that. It's just obviously right now it's waiting on stocks, and stocks are still bid. I mean, God, how in the fudge sickle are stocks still bid this morning? You thought I was going to say it, didn't you? They're bid every day. Every day. It doesn't matter. Doesn't matter. Dollar Canadian. Okay. I almost said it. It's so maddening. It's like, dude. Like if higher inflation doesn't affect this market, I don't know what's going to affect the market. Really, I don't know. Okay, so look at the dollar Canadian. We found support on trendline support today. That's right here. That comes in at the horizontal lows. Even after that strong employment data, 125.40. Okay. Resistance is going to be, as you guys can see, we're just building this triangle. So resistance is now 126.20 by the time we get there. Then 126.50. Okay. We stay in a range until we break out. That's it. Dollar Swiss. So the dollar Swiss found some support here. It found support right ahead of this 92.10. I think that's the level we've been writing down forever, right? Because this is 92.10. It was right around here. Let's look at the bias chart support. 92. Wait, hold on. Let's go over to dollar Swiss. 92.10 support right here. I mean, it's really, it's all very important. And let's also acknowledge the fact that if we don't break this 92 level, then what we're doing is we're making higher lows in the dollar. That's important to realize. You know, when you're looking at a trend, it's higher highs, higher lows, lower highs, lower lows. In this case, you know, higher lows, higher highs. Trend hasn't abated yet. Okay. So that's why this 92 level is important. But we also have to, you know, pay attention that the yields are going higher too. And that's one of the things that's, you know, dragging the not only the Swissy, but the dollar yen higher. We took out this minor downtrend line. So now let's figure out where some resistance is. So the resistance would be up here. Let's see. I mean, that's the 38%, 24%, 50%, probably really important because of this these spike lows here. So that's going to be at 93.50. I doubt we're getting all the way there today. So 93.25, just in case the dollar does spike. 93.25. I'm taking it. Remember, I took us out of the bullish trend this week. So 92, 92.10, very important. Okay, stocks are open, by the way. US dollar, Norwegian krona. We broke this downtrend line, but you know, if you remember earlier this week, the US dollar Norwegian krona broke this trend line right here, and it looked bullish, and then all of a sudden we slumped. So don't get too excited about this US dollar Norway right now. Not unless you start to see crude oil, roll over, and stocks. It's hard for me to get too terribly excited about this. 855 is resistance today. We're going to stay in a range. 855 support. Obviously is this like this whole trend line support coming through here, right through there. So that's going to be roughly 845. So there's not a lot to do with the US dollar Norwegian krona right now. I'm bullish and I'm long, but I'm just saying that, from when you're looking at a trade, if you didn't buy it earlier this week at 845, like when we put out this pattern in play, if you didn't buy it here, right? Looking at it today, it's like, okay, do you buy it now? I don't know if there's like a real convincing argument at this moment when stocks are elevated at these levels. You know what I mean? If we start to see stocks roll over, that's something. But for right now, you can see the stock market's actually holding up pretty well. I mean, the S&P is, look, we just bounced back the last half an hour. For why? I don't know, but we have. So anyway, I don't think there's any reason to be, super bullish the US dollar Norwegian krona unless you start to see stocks roll over, crude oil roll over, and all that stuff. Okay. Moving our way lower, dollar yen, huge support at 109. So the only thing I have to write here with dollar yen is 109. How's that? You guys got that? Can you tell that that's super important? Oh, shit. Shoot. Sorry. Trying to be funny here, but it's not going to work. You can see the very, very important, dollar yen support. Okay. Resistance, probably back at 110. Look, we just rejected it. Probably pretty big resistance today. You can see all this horizontal support. It's a 15-minute, but that gives us a pretty good idea of how important 110 is. 110, 110, 110, 110, 110, right? So let's just write that down, 110. But you have to keep it in bullish, and I would just be buying dips while 109 is holding, frankly. Dow's at new highs, of course. That's awesome. The market rallies every morning right at the open. Dollar index. So the dollar index held the 618. So that's important. That comes in at 92.10. We've been as low as 92. So we got to write down 92. But you can see the importance of that 92 level. Resistance today is going to be at 92.50. Those are the spike highs from yesterday. So I'm going to keep us in range because I'm not fully convinced that the dollar is ready to bounce yet. It's not going to go anywhere while stocks are moving higher, right? So dollar MEX, we came right to trendline resistance here, push right up against it. So that means this, and it's still this 2026 level, really key. Okay. Until then, and matter of fact, I actually even have to put this in bearish right now because we are in breakdown territory. Now there is a wedge here. So if we get back above 2027, I can flip it to bullish again. But for right now, it's bearish. And support is at 20, probably the 78% retracement, which is 1999. So I'm going to write that down. Okay. Gold is very easy today. Here, I'll just do it for you. Whoops. While we're below 1760, you have to keep it in bearish. But here comes the buts. If we flip above 1760, it goes immediately bullish because that's when the double bottom triggers, right? So let's go over to gold. Let's take a look at the charts. So you guys know the big rejection at 1760, huge rejection. Support. I mean, I wrote down 1700, but probably it's more like 1720. See all these like spike lows through here? I'll write down 1720. That's correct. Silver. Let's go over to the 4 hour. So Grega and Steve were looking at this wedge. So it broke out yesterday, but man, that wasn't much of a move. So I'm going to go with this, that we're still range bound really between 2680 and 2480. So, or 2380. So it's just same crap. We're just in a range. Bitcoin channel held last night. So that means that we could break here and make a move for 60, but it's the same stuff, right? Supports at 55,000, resistances at 60,000. And guess what, Steve? Steve, you listening in? Guess what? Oh, I guess he ain't listening in.
What, mate?
Oh, guess what? Bitcoin,
Yeah.
because of the lack of volatility that we're seeing right now, has now qualified it for an official currency. Did you not know? It's not, I'm here at ForexAnalytix. We're officially accepting payment in Bitcoin because now there's no fluctuation in Bitcoin.
Absolutely, yeah.
I'm joking, obviously. So so the bias chart's finished. You know, this big tick up of inflation. We've seen the Dow rally to highs. The S&P's recovered a little bit, but what do you do? What do you do here?
Unfortunately, nothing changed yet. That's the problem. But you know, we saw the PPI. The PPI number came in late. We didn't manage to cover it over FA.C.E, but came in at 4% year on year.
Yeah, that's big.
4.2.
It is 4.2. Sorry, yeah. So that's big, and you know, we're seeing that measure of inflation, or basically the leading indicator for inflation, is rising quite quickly. Reported inflation is still not high enough to worry the Fed, but eventually it will do. The question is, will they act before, or will they act when it's too late? And I think they're going to let...
When it's too late.
Exactly. They think everything is transitory and it's going to come and go. And when it appears that it's not transitory, then what do?
Well, so that's what the market, so that's a great point, right, guys? I mean, Stelios made, it's like, hey, the market's going to look at this as being transitory. The Fed told us it's going to be transitory, so it is transitory. And they're going to act like it's transitory. So unless you prove me otherwise, and we see producer prices on a quarterly basis at these levels, and you notice I didn't say monthly, I'm saying quarterly basis. If we see prints consistent at these levels, then I might get a little worried. But until then,
you should get worried in any case, because I've explained.
No, I'm just talking about the market in general. You know, I'm
yeah,
not
but yeah, I know. But you know,
get what I'm saying, right?
One of the biggest misconceptions, and coincidentally or not, I've made that monologue I don't remember if it was the Morning Edge or Face. I hate this word connected with inflation, transitory, because many people don't realize, it's this misuse of words that, it's of course intentional because it softens up things. Transitory means that it's temporary, right?
Right.
The problem is that people don't realize the following. Let's assume that this year we get a 3% inflation, the way they measure it and report it, and let's assume it's temporary. Does the price level reset back to 100 when the next year begins? I mean, we've gone through, let's say, January 1st to December
Yeah,
31st.
for it to be
Yeah,
transitory, it has to go negative the next year, right?
exactly.
Yeah.
No, it doesn't. So what they're saying, even if it's a temporary spike, the price increase starts the next year from where we left it the previous year, meaning the purchasing power erosion has already taken place and it's not being reversed. It won't get reversed. So the debasement of any currency that happens within the period of 1 year is permanent. It's not transitory. A spike in the rate of which this debasement happens might be temporary, but the effect stays forever.
Well, they're just saying that the rate of debasement is high temporarily, and then it's going to go back to lower levels. But anyway, I get your point. I get your
But
point.
it's
And it's,
accumulation. It's an accumulation. You know what I
yeah,
mean?
but do you know
Yeah.
what I think about? I think about how the market, like we said, is so complacent about, oh, the Fed's never going to be hawkish, so they're always going to be there. They're going to be buying everything. The minute they change their tune, the minute they do that, guess what's going to happen? I mean, I think it's going to be shock everywhere.
There's going to be a massacre, and the
Yeah.
main reason is because as you said, and you know that's exactly what I believe. They're going to be very late in acting, and that means that when they actually change course, it's going to be a huge issue already. So the market is going to wake up to a very unpleasant reality at that point. You know what I mean?
Yeah, but right now,
Yes.
F
Right
it,
now.
F it.
Oh yeah, absolutely.
Yeah,
That's the mentality.
Yeah.
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 YOLO, baby. All right.
YOLO.
Hey, I've got to take a little bit of a break.
Go for
Because
it.
of coffee. So I'm going to pass it over to you guys. But I want to thank everybody and I want to say happy Friday to you guys. And thanks everybody for your support and being here this morning. And Steve, Stelios, I'm going to pass it over to you guys.
Thank you, Blake.
Thank you, mate.
Thanks, guys.
Okay. So market opened and a little bit in risk, the usual one. A couple of things to say, which we didn't
I'm
say.
sorry. I meant to
Yep.
say I'm out of coffee. I'm taking a break because I'm out of coffee. That's
Oh.
We understood something different.
For people who follow Norway, we got a CPI print, came in at 3.1%, lower than expected, but still above 3% for the second reading in a row. And, still, this is part of the general theme of rising inflation and rising, PPI. PPI year on year, 18.4%. Nice.
Sounds healthy.
Yeah, exactly. So it's coming. It's coming. Asset price inflation is not going to be just bonds and stocks anymore. It's going to be a bit of everything. And now the way every country measures it is different, but I think it's manifesting itself. We got some other numbers, surprisingly a little bit weak from Germany. Industrial production and trade balance weaker than expected, but really it's been touch and go and hit and miss over the last few months. Yeah, and otherwise, I think it's probably going to be a quite close to the week. Equities grinding higher, the usual, and really only gold and silver not performing well today, and the commodity currencies as well. Canadian obviously helped by the good data, but look at Norway. It's euro Norway, dollar Norway up over 0.5%, and Aussie and Kiwi also grinding lower. So I still remain of the opinion that if you want to take a risk-off view, do it. Don't do it via equities. Do it via one of these commodity currencies, which I think are going to move quite a bit. And that's. I don't have much else to say.
The
I don't know, do we
Kiwi
have
definitely still looks like,
Yeah.
you know, it's in danger of,
bear flag?
yeah, breaking down here. The rebound so far is definitely not inspiring.
Yeah.
Although I have to admit that, you know, Aussie, I don't know. I mean, somebody can see the same type of recovery here, but in general, the whole move lower in Aussie doesn't look anything but corrective to me. So of course, you know, they can't, you know, move in completely different directions. So you know, it's they either will move higher, both of them, or lower, both of them. Or, okay, one of them can overperform the other or underperform the other. But so I'm in my opinion, we're forced to remain in wait and see mode for the reasons we've explained multiple times.
Exactly.
The equities remain under this relentless beat. They've now hit the 161.8% extension of this corrective move lower, and we're just less than 50 handles away from the 161.8% extension of the COVID move lower. And you know, as long as they remain well bid, it's not easy for the dollar to have a a real proper recovery. And so far, the rebound from the dollar side, is totally uninspiring. So unless equities start coming under pressure, the dollar will probably soon be forced to resume its downtrend. So one of the two has to happen. And we've seen some weakness during the past couple of weeks from the dollar, but it hasn't broken down yet to new lows. I mean, we're far away from that. So this remains the main theme, and having to do with commodity currencies. We talked about the Aussie, we talked about the Kiwi. USD NOK, I still don't see anything here that would turn me bullish. USD SEK, I don't see anything in this rebound that would also turn me bullish. I mean, as long as we stay within this channel and break lower in the direction of the prior trend, is probably a higher probability scenario. Even USD CAD, I mean, yeah, we've broken out of this channel, but we didn't get any type of follow through, which makes me extremely skeptical. USD MXN remains under pressure. Perhaps this three-wave move higher, was it. Now, having to do with metals that you mentioned, Stelio. So gold is having so far an outside black candle. I don't know. I mean, we've temporarily gone over the previous high here, which theoretically would trigger a double bottom. Price action today doesn't point to that thing. Same here with silver. Silver yesterday incrementally broke above this wedge, but no follow through. So it's not exactly what you expect to see. If this was like a valid move. We're in wait and see mode there as well. Platinum is the only one that has actually broken out and remains above it. Palladium, it looks bullish. What can I say? Yeah, and in any case, as long as we remain above this triangle, I would still keep looking higher. Copper seems to have broken out of this triangle and consolidating. Looks bullish until proven otherwise. Cryptocurrencies, are not following risk higher. Bitcoin did rebound from this wedge support today, because yesterday we closed more or less right on top of it. So no breakdown yet. As Ethereum if you ask me, it seems to be producing probably another bull flag. Here. I think the next move might be the last one before we see a deeper correction. And Bitcoin the same. I don't know if we're going to manage to get a higher high. But if we do, I would expect that to be terminal and then see some type of a larger corrective move lower. Now, having to do with crude oil, we had this discussion with Grega. My opinion remains that this is some type of a corrective move after this leg lower, and I would expect at least one more leg lower to unfold before we can get a continuation of the uptrend. Now, if this happens, there is a decent chance that equities will correct lower as well, or the opposite, equities might trigger the next leg down. But it's all in theory, because so far we haven't seen any type of weakness or any type of event just spilling over to equity investors and getting them worried in any way. Of course, that can't last forever, but it's already been ongoing for quite some time. So you go with what you have in hand, and that's what we currently have in hand. Anyhow, let me go through some of your questions.
Silver, we talked about platinum, palladium, and nickel. So few metals.
Yeah, so only nickel left. Now, nickel, I was surprised by nickel. Let me find it first. Here it is. So I was surprised by nickel because this type of price action, was pointing more likely, to a continuation lower. And then we had this move higher from this rectangle. So, clearly that extends this type of rebound. Now, where would that target? I assume we're getting there. Oh, we already got there yesterday. So we fulfilled this rectangle's extension. I still expect that this type of impulsive move lower probably has another leg. So the question is from where? Let's fib this. Okay, so if we move higher, the 50% fib is at 1300. In any case, I don't expect this rebound to be the beginning of the next leg higher. I think my original thesis is still valid. We're going to see more weakness before we can see a recovery. 1300 and then a very key confluence of resistance is 1340 are good levels to see a turn lower once again. So that's what I think about nickel. Hey Steve, FAO and FAG look like they have turned stronger than their respective metals. Let me have a look. Yeah, the type of formation we have here is extremely similar to the gold one, which makes sense. And technically speaking, it's the same type of thing, right? In my opinion, just look at the move higher and look at the move lower, right? Clearly a corrective move, but we have no way of saying with certainty that the correction ended there, right? And it won't produce something like that before it does this. Same thing with FAG. I mean, shouldn't that be politically incorrect? I know it's not spelled like that, but whatever. So yeah, I mean, the same thing here. I mean, some type of a complex type of correction. You know, we have this horizontal move, this type of rebound, this move lower. I wouldn't be surprised if this is some type of irregular correction, produces incrementally a lower low. We got a higher high incrementally over there. I wouldn't be surprised to see a lower low before it does that. Very, very, very complex type of correction. It's not easy. I mean, the gold corrective move, I think it's very straightforward. The silver one, you know, a lot more devious, if you ask me. That's why I said I wouldn't be surprised if it produces a lower low, gets people turning, you know, bearish at the totally wrong time, and then exploding higher. Yeah, yeah, yes, yes, mate. That's right. Likely 335 move. Yes.
Can I just say that FAG is one of the instruments I use to get long silver.
Of course you do. You like the name of the instrument,
yeah,
right?
yeah. So Dimitri, that's the one I'm using too. One of them actually. Anyway.
You're really fond of FAG, right?
Yeah.
Okay. So what else? Any other requests, guys, girls? XAA, is that the ticker? Because you broke it in two. Is this
no? X is Alcoa. AA is Alcoa. X is British US Steel.
Oh.
So similar companies.
Yeah. Listen, not an easy one to trade, this one. I think it's probably at its last. You see how it looks like Bitcoin at the moment. I'm not saying they're correlated, but what I'm saying is that you can get a new high here if you ask me, but you might not before we see a deeper correction. That's what I think we have here. So yeah, I would be careful. I think if you're looking to buy it, I think you'll sooner rather than later get better opportunities to buying it at better prices than you currently find. Score. Let's see what score is. Oh, whatever score is. Oh my god. Whatever score is, it looks very, very sick. Very, very sick. I mean, after such a move lower, this type of a formation is. Can it be some kind of a rounded bottom? Yes, but most likely this is some type of a consolidation. I mean, this obviously can't go to -4, but I guess it can go to 0. Anyhow, it looks really, really sick, whatever it is. AA. Wait a second. We might have. Here it is. AA. Some type of a consolidation, expanding triangle, whatever. With a lot of RSI divergence. Yeah, you should be careful here. We might get something like this. Yeah, something like this is likely. And SOS. What is SOS? Something that doesn't look good. That's what SOS is.
Hence the ticker name.
Yeah, it's in need of some help. Most likely scenario here. You got one move lower, some type of consolidation, likely another move lower. This looks like a penny shit stock to me, if you ask me. Just from the price action, I have no idea what this company is. So I would be very careful. I wouldn't be surprised to see a big rebound here, but I think this probably gets resolved to the downside. Anything else? MGI. MGI. Let's see. Ooh. Doesn't look good. Anything else? Weekly, the big drop was dividend. I don't understand what you want to say there, but let me see. National Vision Holdings. This looks bullish on the other hand, clearly. This clearly looks bullish to me. Not this one. Which one? It's in Australia. Okay, let's see. This one, then. What the hell is this? This is for sure a penny stock. There's no question about it. Some kind of speculation obviously brought it to 1.62, and it's currently scraping the bottom from what I see. And this type of formation, if you ask me, probably points to further weakness, more likely than strength. But I would not even get close to penny stocks like this, because literally they can wipe you out in an intraday move. This looks to be extremely liquid from the price action. So, personally, for my taste, I would stay the hell away from this. Anything else?
Okay, great. Thank you very much, Steve, again for all.
Okay, guys. So have a wonderful weekend, and let's hope the next week brings finally some type of volatility. Bye-bye.
Yep. Thank you, everybody. Bye-bye.